Welcome. So this is our third in our series of webinars covering the proposals in International Non-Profit Accounting Guidance, Exposure Draft 3. My name is Samantha Msoke. I'm the project director for the IFR for NPO projects working for Humentum, and I'm based in Uganda. And I'm really delighted to be joined by Karen Sanderson, who's the INPAG Technical Director. Now, Karen, are you able to unmute and say hi?
I am able to unmute and say hi. Hopefully you can hear me. I'm very much looking forward to today's webinar.
Super. Thank you so much. So I hope you can see my screen all right. We are having a multilingual webinar in Teams. So I'd like to briefly explain how to get the captions and translate them. So first of all, you click and these instructions are also in a Word document, which Brian is kindly going to put into Word, right, into the chat box. Let me just say this in Spanish and French. So para traducir los subtítulos al español, siga estos pasos. Las instrucciones también se compartirán en el documento de Word en el chat. So, pour traduire les sous-titres en français, veuillez suivre les étapes suivantes. Les instructions seront également partagées dans un document Word dans ce chat. So, number 1 is click on the 3 dots for more. Number 2, select language and speech. Number 3, turn on live captions. Of course, this may look different if your Teams language is set to another language. The 4th is in the screen at the bottom where your captions are. There is a little settings cog in the right corner. Click that. And then you can choose to change the caption language. Please do not change the spoken language, only change the caption language. Tenga cuidado de cambiar el idioma de los subtítulos, no el idioma hablado. Veillez à modifier la langue des sous-titres et non la langue parlée. Super. Now we can also translate the chat, and I recommend that we all do this so that if somebody types in French or Spanish or one of the 28 languages covered, we can all see it in our own language. So if I hope somebody has written in the chat. Is there a message in the chat already? Yes, Brian has put a message in the chat, and you're also welcome to introduce yourself there. But if you hover over a message, you see 3 dots to the right of the message. And when you click those dots, one of the options is translation. From there, you can go to settings. If you do translate, you can translate an individual message, but if you go to settings, you can choose to translate everything. So there's a whole bit called appearance and accessibility. You need to scroll down to the translation section, translate messages into this language. You can select your language, and then how to handle messages, auto translate all messages. And that way, everything will appear in your language. Do let me know if that's working for you. If you have any problems, do type in the chat and Brian will be glad to help you. Super. So without further ado, let's get started. Welcome again. This is a fantastic topic today, fund accounting. This is the 3rd in our series. We covered classification and reporting of expenses. We covered INPAG and donor reporting, a harmonized reporting format with a standard set of expenditure headings yesterday. And today we're doing fund accounting. And you can probably see that these topics are all a bit interrelated. It's quite hard to make them very, they're not all standalone. They all speak to each other. So if you missed either of those webinars, I do recommend that you watch those as well. And next week, week after next, we have illustrative financial statements that are part of the INPAG implementation guidance, and a wrap up with other topics as well. The reason that we're sharing these proposals and the reason that we're having these webinars is precisely so that you can share your feedback. An exposure draft is a draft of the text that is shared for public comment, and we won't be finalising until next year. So please make sure you share your opinions and that your opinions can be fed into that feedback process. So today's session, we start with a brief introduction, which we've basically done, and then we're going to show a pre-recorded video. Now, during that time, please do type your questions. You can use the chat if you want to type a logistical question, but please use the Q&A function if you have a topic-related question or comment. And you can also thumbs up other people's questions or comments if you think that you have the same question, and that will help them come up the list. So the explainer video we will play within Teams in English, but the same video is available in Spanish and French on YouTube. So the links to the YouTube videos have just been shared. And the slide decks in French and Spanish are also available. We'll also share with you the video in English and YouTube as well, so you can watch it later if you'd like. But I think without further ado, we will go ahead and watch the video. So it's pre-recorded. It's actually done with an AI model, and I would be interested to get your feedback on that. And it's about 20 minutes long, and it will explain the proposals for fund accounting. Now, if you are going to watch in French or Spanish in another browser, you might need to remove the sound from this Teams meeting. To do that, again, go to the 3 dots, More setting, go to Audio settings, and click the speaker to turn your sound off. And then when you've done listening, please come back into Teams and turn your sound back on so that we can all be together for the Q&A. Okay, so here goes. It might be quiet, but we've tested it and it should be loud enough. But in case it's quiet, do turn up your volume, and please do type in the chat if you can't hear or it's not working for you. All right, fingers crossed. Here we go.
This video explains the proposals for fund accounting included in Section 36 of International Non-Profit Accounting Guidance as part of the third exposure draft. It also explains changes proposed to Section 5 on the Statement of Income and Expenses that were originally shared in Exposure Draft 1. Fund accounting is one of the key concepts in INPAG. Having separate funds enables NPOs to track the receipt and use of resources according to their intended use. It also means that balances on funds carried between financial reporting periods can be shown. Fund accounting is essential for the transparency and accountability for an NPO's funds. All NPOs will have at least one fund. This fund can be known as the general fund, accumulated fund, or general reserve. INPAG uses the term general fund. An NPO may have other funds for a variety of reasons. This could be due to internal operating choices or external public commitments. Maintenance of additional funds may also be necessary because of legal or equivalent requirements arising from arrangements with grantors or donors or local jurisdictional laws. Each NPO needs to determine whether it has funds other than a general fund. INPAG takes a principles-based approach, which looks at the substance of a transaction rather than its legal form. A separate fund will exist in two instances. Either there is a legal or equivalent requirement to separately track resources and how they have been used. Or stakeholders have a reasonable expectation that resources will be used for a specific set of activities and that those resources will be tracked. These stakeholders can be external, such as funders, or internal, such as the governing body. If no separate funds are identified, an NPO will only have a general fund. The reasonable expectations of stakeholders are critical to an NPO in making a judgment about whether a fund needs to be separately identified and presented. Factors that an NPO can consider in assessing whether a stakeholder has a reasonable expectation in relation to an individual grant or donation include the following: the intention by the NPO to act in a particular way, and how that intention has been communicated. Whether the external communication of the NPO's intentions occurs before or after resources have been provided or promised. Any preferences expressed and previous experience of working with that grantor. Past practice. And the level of discretion over the use of the resources. Where an NPO makes an external public commitment about the use of resources raised through a specific fundraising campaign, at the time or before fundraising commences, the campaign must be tracked separately. This is because those responding to the campaign will expect the resources to be used for the specific purpose of the campaign. They would expect that these resources can be separately identified and tracked to give confidence that the funds are only used for this purpose. The external public commitment creates this reasonable expectation. In some jurisdictions, there may also be a regulatory obligation to separate these funds. If an external public commitment is not made at the time or before the fundraising campaign is launched, a separate fund may not be required. An NPO should track its use of the resources in a fund through regular management reporting. It must in any case keep separate accounting records for the set of activities in each fund. These accounting records will comprise the income, expenses, assets and liabilities. Only the income, expenses, assets and liabilities that relate to the specific purposes of the fund can be recorded for that fund. This can include direct costs, shared costs and support costs, which we will come back to later. Many grant arrangements could be considered to be a fund. To be a separate fund, an NPO must be able to identify the grant-specific assets and liabilities associated with each grant, including non-current assets such as plant and equipment, and work in progress. Payables, receivables and cash associated with each fund should also be tracked. This is because at the end of the grant arrangement, any remaining cash or other assets may need to be returned to the grantor, or may need to be identified as being available for other purposes. For each separate fund, an assessment needs to be carried out at each reporting date. This assessment looks at whether a fund is to be presented as part of funds with restrictions or part of funds without restrictions. For a fund to be presented as a fund with restrictions, it needs to meet one of two criteria that are set out in INPAG. The first criterion looks at whether the resources in a fund are limited to a specific purpose or activity due to an externally imposed requirement. This will most likely be a legal or equivalent arrangement and can be a formal agreement or a private arrangement. The second criterion is whether an NPO has externally communicated a commitment that the resources raised through a fundraising campaign will be used for a specific purpose. This public commitment must be made at or before the launch of the fundraising campaign. If the campaign has created a reasonable expectation that the resources raised are only to be used for a specific purpose, then the fund is to be treated as a fund with restrictions. It is possible that an NPO has many individual funds that have restrictions. In developing the criteria, a number of factors were considered. The following were not considered to be criteria for deciding whether a fund is to be shown within funds with restrictions. NPOs have a moral and ethical requirement to use all of their resources for their missional purposes. Practically, it might be difficult to separate the moral and ethical requirements relating to the general activities of an NPO from more specific activities. Moral and ethical requirements taken in isolation are not therefore a criterion in determining whether a fund has restrictions. Globally, regulatory requirements can differ significantly. As this could lead to different treatments of similar activities across jurisdictions, regulatory requirements are also not a criterion. The accounting treatment of the resources received into a fund is also not a criterion. This is because the decision about presentation as a fund is independent of the timing of revenue recognition. While these are not criteria for determining whether a fund has restrictions, they may be factors in identifying the need for a separate fund. INPAG Exposure Draft 2 covered the accounting for grant arrangements. This categorized grants as either enforceable grant arrangements, EGAs for short, or other funding arrangements, called OFAs. The obligations in EGAs create a requirement for the NPO to act in a specific way. So where an EGA meets the criteria to be a fund, the expectation is that it will be presented as part of funds with restrictions. This is the case, even though the rights and obligations arising from the EGA may be shown as an asset or liability, rather than giving rise to a fund balance. An OFA can be a separate fund. Limitations imposed by an OFA may mean that fund is a fund with restrictions. Even if an OFA does not create a present obligation for the purposes of recognizing the revenue, it can still be presented as part of funds with restrictions. Later in this video, we will turn to some proposed disclosures, which are intended to provide transparency over the income and expenses in each financial reporting period, and shine a light on situations where there are insufficient resources to fund the required activities, or if there is an excess. The costs recorded against each fund can be the direct shared and support costs relating to the specific purposes of that fund. The allocation of shared costs and support costs should be calculated following the principles in Section 24, Part 2, Classification of Expenses. Costs, including a reasonable allocation of support costs, must be charged, even where they are not eligible to be recovered as part of the grant arrangement. All relevant costs must be charged to the fund, even if there are insufficient resources in the fund at that time to cover all the expenses. If the costs to complete the specific purpose for which the fund was established go beyond the original resources provided, these also need to be charged to the fund. This provides transparency about the full costs of an activity. The balances on a fund need to be reviewed at the reporting date to determine if any shortfall is temporary or permanent. Where there is a realistic expectation that there will be further income to cover a shortfall, or that there will be additional expenses, the balance will be carried forward. If there is permanent shortfall, this will need to be addressed by the NPO transferring funds from its funds without restrictions. Transfers between funds may be made for several reasons. These include to make good the shortfall on a fund with restrictions, to transfer a non-current asset that is now held for a general purpose rather than a restricted purpose, where the balance on a fund with restrictions has been released by the grantor and can be used for any purpose, and where the balance on a fund with restrictions can be used for an alternative purpose without legal or regulatory consequences. Critically, a transfer between funds may only be made where this is legally permissible. Transfers between funds in the reporting period must always sum to zero, such that each transfer out of one fund is equal to a transfer into another fund. Funds without restrictions can be used at the discretion of an NPO to further any of its missional purposes. In other words, they are not limited to a specific purpose or activity. Funds without restrictions comprise any fund that has been created through internal designation by an NPO's governance body, as well as any other fund that is not a fund with restrictions. For the avoidance of doubt, the general fund is a fund without restrictions. Where a grantor expresses a non-binding preference on how resources are to be used, this will normally be included as part of funds without restrictions, because it is a preference, not a requirement. Management can track these resources separately if desired. INPAG allows for resources that have been internally designated to be a fund. An internally designated fund can exist, for example, when governing body members set aside resources to be used for a specific set of activities. Such funds must be presented as part of funds without restrictions, because the purpose for the fund can be changed with the approval of the governing body. The internal designation of funds can include setting aside funds for a future project or commitment, such as investment in new equipment, restructuring, or expansion into a new location. This information can be used to explain how the NPO intends to use its funds without restrictions. Information about NPO funds has consistently been raised as a key issue, particularly distinguishing between income and balances that can be used for any missional purpose versus income and balances that have restrictions. INPAG proposes new disclosure requirements. Information is required on each material fund. This information must show the purpose of the fund and the balance at the financial reporting date. Details are also required of the movements on the fund during the year. As a minimum, the total amount of income, expense, other changes and movements between funds must be shown. This information will provide a reconciliation between the opening and closing balance for each fund. The reasons for any transfers between funds with restrictions and funds without restrictions is required. An explanation is required for any balances on a fund with restrictions, where the purpose of the fund has ceased, but the balance has not or cannot be transferred to funds without restrictions. Finally, details are required of the purpose and any planned use of internally designated funds. NPOs need to consider the volume and complexity of information about funds when deciding how to present it to maximize impact. Small funds that are individually immaterial can be aggregated where they have a similar purpose. Disclosures show any shortfalls or excesses on a fund and how these have been addressed. This information is particularly important when shortfalls are met from funds without restrictions. The proposed disclosure note shows how the resources in each fund have been used. It has rows for different funds, grouped according to whether they are restricted or not. And it has columns for opening balance, income, expenses, other changes, transfers between funds, and closing balance. This will help to explain timing differences when resources are received in one financial reporting period and used in a subsequent reporting period. This can lead to surpluses in one year and deficits in others. Disclosures of AGA income and expenses show the obligations that have been met in the reporting period. The provision of information about transfers between funds highlights shortfalls on individual funds and how they have been addressed. This information is important to understand the adequacy of resources for specific funds and operational effectiveness. The proposed disclosures also provide information about funds without restrictions. This can be useful to explain the policy for holding funds without restrictions or why funds are being set aside in designated funds. Holding adequate funds without restrictions is important to provide a buffer against external factors or events. This is crucial to assessing financial resilience. Specific consideration may be needed for non-current assets if they have been funded through fundraising campaigns, grants, or donations. The terms attached to their acquisition and use need to be considered to determine whether an asset is part of a fund with or without restrictions. For example, if a grant-funded asset may only be used for project-related activities, the asset must be shown in a fund with restrictions. But if the asset, once purchased, can be used freely at the NPO's discretion, then it must be shown in a fund without restrictions. In some cases, a grantor may agree that project assets are released for general use after the project is complete. At this point, the asset will be transferred from a fund with restrictions to a fund without restrictions. The following example illustrates how a non-current asset with restrictions is treated. There are further examples in the INPAG implementation guidance. An NPO is given a grant of $10,000 to purchase a truck. The grant is an enforceable grant agreement, so revenue is recognized as the NPO fulfills its obligations. The grantor requires that the truck is used only on the outreach program, which is due to last for 5 years. Revenue of $10,000 is recognized when the truck is purchased. The truck has an expected life of 10 years and is depreciated on a straight-line basis. The truck is shown in the balance sheet as an asset at its purchase price. In each subsequent year, a depreciation expense of $1,000 is charged, and the carrying amount of the asset is reduced. The grantor's right that the truck is used only on the specific outreach program means that the NPO has decided that the truck is presented as part of funds with restrictions. This is because the truck is not available for general usage. If the truck was purchased in year 0, then in year 1, the fund has an opening balance of $10,000, which is the revenue it received to fund the purchase of the truck. This balance is reduced by $1,000 in each successive year because of the depreciation charge. At the end of the program in year 5, the NPO can use the truck on other activities. At the end of the 5-year period, the asset is transferred out of a fund with restrictions. The balance is transferred from the restricted fund to the general fund. The truck could be grouped with other non-current assets that have restrictions, as part of a single fund for non-current assets, or held on its own. Any decision to group assets needs to take account of external requirements. The development of the fund accounting requirements, which has taken account of the feedback on Exposure Draft 1, has resulted in 2 changes. In Section 2 Concepts and Pervasive Principles, fund accounting remains as a concept, but the detail and definitions are now held in Section 36. AD1 proposed that the statement of income and expenses show different columns for funds with restrictions and funds without restrictions. The disclosure proposals in Section 36 provide this information. To avoid duplication, the statement of income and expenditure no longer requires the multi-column presentation proposed earlier. The requirements for the other primary statements remain unchanged. The statement of changes in net assets will still have columns for funds with restrictions and funds without restrictions. And the statement of financial position will still require a split of the closing fund balance between funds with restrictions and funds without restrictions. This video has been about fund accounting, with the requirement to identify those funds that should be presented as part of funds with restrictions or funds without restrictions. The term general reserves can sometimes be used to refer to the closing balance on the general fund. The term may also be used to refer to the portion of general funds that would be available to sustain the organization in the event of a shock. INPAG does not use the term in either of these ways. INPAG uses the term reserve only in connection with the specific sections of INPAG that require a reserve to be created. For example, there will be a revaluation reserve where an NPO uses the revaluation model for measuring its assets, and it has valuation gains and losses. These reserves are for accounting purposes and are not able to be used for other purposes. Reserves are therefore separate to the funds held by an NPO, and are shown separately to the funds with restrictions and funds without restrictions. In summary, fund accounting exists to track the receipt and use of resources according to their intended purpose. NPOs may have funds in addition to a general fund as a result of choices by management because of jurisdictional law, legal or equivalent requirements arising from grant arrangements, or as a result of reasonable expectations created by the NPO that resources will be used for a specific purpose. INPAG specifies the circumstances where a separate fund exists and describes factors to consider, particularly where stakeholders may hold reasonable expectations about the separate tracking of resources. INPAG requires that at each reporting date, funds are assessed to determine whether they are part of funds with or without restrictions. INPAG includes 2 criteria for a fund to be treated as a fund with restrictions. It also sets out which expenses are to be charged to a fund, and when a transfer may take place between funds. New disclosures require that the amounts of income, expenses, transfers and fund balances are shown for each fund, or aggregation of immaterial funds. This presentation provides transparency over any shortfalls or excesses on a fund. An explanation is required for any funds with a negative balance at the reporting date. These disclosures can assist NPOs in explaining the context for any surpluses or deficits in a particular financial reporting period. We look forward to hearing your feedback on these proposals. To respond, visit www.ifrfornpo.org/have-your-say. The invitation to comment includes questions on particular areas where we would like to have feedback, but comments are welcome on any aspects of the proposals. Download a template response document and upload your completed response or comment letter. Responses must be in English. The deadline is the 16th of September 2024.
Great. Okay. Well, I hope that I'm seeing some comments and things there, which means I'm hoping that landed in some way. And we've got some time now to hear some of your comments and questions. There are a few in the Q&A already. Please do add any comments or questions that you have. I know from my experience that fund accounting is something that a lot of us actually do in NPOs because we need to do it for grant reporting, but it doesn't appear in any international standards. It doesn't appear in IFRS, it doesn't appear in IPSAS. And so I think this has been a really exciting opportunity to formalise and standardise the way that this is done. But really important that we get this right, and important that this makes sense for the sector and that we hear your thoughts on it. So there's a question or comment here from Mark. He says, slide 13, showing the relationship between these different types of grants and the restricted, unrestricted funds is very helpful. So just to recap, we had in Exposure Draft 2, there were two types of grants: enforceable granting arrangements and other funding arrangements. And at the time in ED2, we weren't ready to share this proposals around restrictions and fund accounting. So I know there was quite a bit of questions and clarification there. So I'm glad, Mark, that you found that helpful. If others have found it helpful, let us know in the chat. Karen, Mark is asking, could this diagram be used in the implementation guidance in INPAG? It's so helpful for clearing some of the confusion around recognition versus presentation.
Look, absolutely, we'll look at doing that. I think the diagram that we end up with will very much depend on where we land once we've considered all the responses to ED2, where we looked at the grant model and ED3. But absolutely, if this is helpful to include, we will set something out in the implementation guidance.
Super. I can see somebody asking where the Q&A is. It should be at the top of your screen if you're on a laptop. Possibly click the three dots more button, and you should see something that says Q&A. Brilliant. Thanks, Karen. Nigel has asked for a really interesting clarification here. So if we think back to the revenue recognition requirements in Exposure Draft 2, there's a section on revenue which had part 1 for grants and donations, which includes those EGAs and OFAs, but it also has part 2, revenue from customers. So some NPOs sell their services. Their business model is to generate revenue from sales. Doesn't mean that it's distributed, it's not profit, but it's still sales. Now, is it fair to assume that normal everyday revenue from customers would always be unrestricted? Would it always be unrestricted? If not, how is a restricted fund from Part 2 revenue identified?
So it's a really great question, Nigel. Thank you for the question. When we were developing this, very much the focus was on grants and donations, because they are the ones that sit outside of the contracts with customers, and have got different arrangements that sit around them as a consequence. And we were very much focused on that, and I have been trying to rack my brains as I saw your question to think of whether there were any circumstances that I could think of where that would apply to Part 2. And I don't think I can at this minute. And of course, this is an area on which we would love to have your feedback. So if you have got types of revenue that would be accounted for in Part 2, where there is a question in your mind about where it would sit in a fund, please do raise those questions. We want to hear them. But I can't think of any. And maybe that is a clarification that we can add to the guidance after we have been through this process and received comments from individuals and organisations.
Brilliant. So normal everyday sales probably wouldn't be restrictions. Normally it would be unrestricted. Let us know if you can think of something that gives you cause for confusion or doubt. Brilliant. Margaret has asked, where would you expect to see foreign currency revaluations of funds contracted in a different currency from the NPO reporting currency? Thank you, Margaret. This has been one of my questions since day one. So let's say the fund balance is denominated in donor currency, because they give you, let's say, dollars, you spend dollars, and in terms of how the donor sees it, it's a dollar denominated fund balance. And yet your entity is in, let's say, Uganda, where I am, in Uganda shillings, the dollar Uganda rate changes. How do I change the shilling value of my fund balance to reflect the change in the dollar rate?
So in exposure draft 2, we looked at foreign currency translation. It isn't the accounting side of that was not an area that we looked at, but we did look at presentation and disclosure. And so from an accounting record perspective, we would expect you to follow the requirements of that. So you would translate the transactions and the balances in the reporting period and at the reporting date. But if you recall in the presentation, when we were looking at the movement on funds, there was a column on there that had other changes in it. And that is the column that we would expect to be used to show where there has been a gain or a loss as a result of foreign currency translation. And in fact, in section 30, there is a requirement to disclose sort of material amounts of that, so we can see, or users can see, why a fund balance has changed as a consequence of really material changes there. So we've included that. And if you look at the illustrative financial statements, there's a bit more about that in the example that's there, where we use that, and we show that in the examples too.
Brilliant. I think this is so exciting to get some transparency around that, because this has been a problem where organizations saying, I'm making foreign exchange losses, and that's the language that you're using, but it's very different from the way it's used in other sectors, and it sometimes gets misunderstood by funders as well. So it's really helpful. Bernadetta says, funds relating to previous year project activities, but received in this year, should recognition be in the previous year? So I'm saying I did the work last year. We had an agreement. So we did the work. We used our own money to do the work. I've got the expenses. So I've obviously got some sort of deficit at the end of my year, but then I'm going to receive the funds next year. Should I pull the recognition of the revenue into the previous year so that the income and the revenue are in the same period?
So the answer to that is very much depends on the nature of the agreement and the obligation that you have in the agreement. So in exposure draft 2, I think as we put in the video, we talked about enforceable grant arrangements and other funding arrangement. If it's an enforceable grant arrangement and you have done what you have been asked to do, you just haven't received the money yet for it, then it would be appropriate to recognise the revenue in the preceding period and then have a receivable. That's entirely appropriate. But if it's not an enforceable grant arrangement, then the expenses would be in the previous year and the revenue would be when you recognised it in the current year. So it depends on the type of arrangement and the nature of the obligations that you have in those arrangements.
Right. So this is really coming back to the interface between the revenue recognition guidance in exposure draft 2 and which column you put it in. Is it with restrictions, without? And yes. I think there's been a lot of common practice, and it's really important to clarify this, because there has been common practice, certainly where I've worked in Uganda and across Africa, that if it's restricted, then I'm going to put the revenue and the expenses together so that I don't get all these surpluses and deficits, because that can create its own problems. But INPAG is very clear. You can't just decide to do that just because it's restricted, just because you have to use it for certain things, isn't the same as there is an enforceable obligation of deliverables that must be done in order to be allowed to receive the income, or for the income to be recognised. Yeah. So, and
that's why the movement in funds statement is really important, because in that example, if it wasn't an enforceable grant arrangement, you would have an opening balance that is the expense, and then you would be able to show the income in that period that then would hopefully reduce that balance to zero. So you'll be able to see and explain that you've got revenue in the current period because you have done work in the previous period. So if that was the only item that you had, you could show why you had a surplus for it.
Brilliant. So hopefully that helps. I would like just to do a request. If you're changing the caption language, please don't change the spoken language, because if you change the spoken language, the computer won't be able to hear us speaking English. Okay. This is from Mohammed, when an asset is transferred from one project to another project after the end of a project, in fact, somebody else said, was it before? Anwar said he loves the example of asset capitalization and transferring between them, just demonstrating how that works. So this is now a practical question. If I am transferring an asset from one project to another at the end of the project, is there guidance about getting approval for funders or not, or anything else? Can I just do that, or do I need to have permission to do that?
So that's probably a question that the guidance itself won't answer. I think we talk about what's sort of legally permissible in there. So I think whether you need approval to do it or whether you can just do it will depend on the grant arrangement that you have in place. So I think it will be case by case based on the original arrangement that you have. So you have to comply with what the arrangement says. If it says you need permission, then we would expect that you would do that before making any accounting transfer. If it doesn't, then you can just make that. So the guidance refers to what is legally permissible, and I think that is the trigger point to it. I don't think we can say anything more about approval processes, because I think that will be very specific to each individual arrangement.
Right. So if your grant says at the end of the project you can have it for general use, that's enough. You don't necessarily need separate. And as Karen said, it's not really something that can be mandated in an accounting standard. It's following the principles. So do you feel that it is unrestricted? Do you feel you have the right to transfer it under the agreements that you have with the funder and the original restriction? Brilliant. Okay, now David Hardage in Australia. Australia does not use fund accounting. This was new to me because I grew up as an accountant in a world where fund accounting was fairly normal in the non-profit sector. So even though he says it does seem to be common in individual countries, has any thought been given to requiring NPOs to use fund accounting in the exposure draft if they present fund reporting, rather than mandating fund reporting for everyone? So is it possible to say, well, if you want to do it, you can, and if you're in Australia, you don't have to? Or is it necessary that everybody has to do it?
So we have drafted this as a requirement that everybody follows. And the reason for doing that was that we were consistently told by stakeholders globally that this was really important information that they needed to have. And that came from both people providing grants or donations who wanted to see how their resources were being used, but also to have a better understanding of those resources that the NPO could use and choose to use how it wanted to do, because that's such an important indicator of the financial resilience of the NPO. Without that information, you can't make those judgment calls. So we have included it as a requirement in the draft proposals that have gone out. And we have also said in there, well, you need to look at also when does a fund exist? So there are judgments that need to be made, and do they meet the kinds of criteria that we've outlined in section 36. I mean, I think this is an area, again, this is why we put this material out for for consultation and for feedback to kind of understand that. I think it's fair to say we hadn't considered not making it a mandatory part of INPAG to date because of the importance that had been placed on the information that is needed by the users of general purpose financial reports. But great to get feedback on this and whether actually there is either a significant issue in preparing it, or whether those who are going to use it say actually that's not so important for us.
Great, good question. And yeah, this has been an area of rich discussion in the advisory groups, certainly, because it is a big change for some organizations in some countries. Super. There's a question here from Jose. I think it was probably originally posted in Spanish and it's been auto-translated, so I hope we get this right. It says there's a tendency to limit restrictions linked to temporary budget use restrictions. So thinking about the way a donor says, well, temporary budget use restrictions. I note that correctly, the project presents the two variables to substantiate the constraint. So these are those two criteria for a fund to be considered a restricted fund, is about there being the externally communicated intention and a legal or equivalent requirement. But he's saying, I think, if I've understood this right, and Jose, you can correct me if you think I've misunderstood the question, there's a tendency to use the idea of restrictions just within budget lines. Like, I can only spend it on this because the budget says it's this. And that budget is different to a grant. It might be part of the grant agreement, might not be. It might be an internal budget. So his question is, are preparers aware that we're going to migrate, like we're effectively changing to a real back-end accounting and not budgetary accounting?
Yes. Yeah, look, I mean, we are for the first time sharing, all of this and our proposals around it. So I think this is an area where awareness will grow of it. I think if we've understood your question correctly, I think what Sam has said, we are not looking at what gets about the budget side of it internally. We're not looking at the internal budget restrictions. I think I'd certainly view that as a more operational issue in terms of how you're managing things within the organisation. What we're talking about here are the presentational requirements about the totality of a fund rather than individual lines within it. And my expectation is that as people think about what we're proposing here, there may be similar questions to this that come up about, because we're having to look at, well, how does the practical and the operational interface with what we're proposing here? So it's good to be thinking about those kinds of things and just to test whether that has got some implications. But we certainly were not thinking about line budget restrictions when we're thinking about the term restrictions.
That's a really interesting thought, actually, because I know there's a lot of talk in the sector about unrestricted funding, flexible funding, which is have the money for this purpose, but we're not going to tie you to each individual line item that you need to write to us and ask for permission to spend extra money from rent to salaries. So that is, the term restriction is used commonly in the sector to mean that. So it's good to point out that and I think it is used in both ways, but in INPAG, we're not talking about those line restrictions. That's a really important clarification. Thank you for raising that, Jose. Now, what else have we got here? Back to assets in fund balances. Dennis is asking, if the presentation of assets under the fund balances, would we therefore need to separate restricted assets from unrestricted assets?
I think you will need to be able to do that. Being completely, frank and open and honest about that. I mean, that may be something that people currently do or not, depending on what is in, whether you have a fixed asset register and the information that is available in that fixed asset register. But I think to know I think even operationally, I think you would want to know whether there was a restriction on the asset that you were using. And so we would expect that information to be held both for your local operational reasons, but also then to be able to feed into the accounting for it.
Absolutely. So I've seen many organisations, you have a fixed asset register, and one of the columns is it restricted or not? And if it's restricted, what's it restricted for? Which grant or which fund does it belong in? Now, again, what I've seen operationally is that many accounting packages, we use the cost coding functionality, say of QuickBooks or something like that, to do our fund accounting. But cost centres don't translate into balance sheet codes. And that's going to be a challenge. So one thing that we are doing is we're talking to software providers. A number are coming to us, to be honest, and we're also trying to be a bit more strategic about that, but to make sure that the accounting needs that are implied by INPAG can be worked into the software packages that the sector uses, and the software providers that want to prioritise meeting the sector's needs can use INPAG as a way for doing that. So once you've got your tracking and you know which assets where, at least your accounting package should be able to help you get your balance sheet and maybe do it by fund, which I know isn't that easy at the moment for some packages. So these are really important operationalizing questions. And if these are challenges that you resonate with or that resonate with you, please do mention these in the formal consultation and responses, because it gives us evidence base to go to software providers, to go to funders, whatever, and to get the changes that are needed to make things workable on the ground. Yeah. Okay. Yeah, Karen,
just as you finish, I think I saw a point somewhere in there about, well, what happens if you can't get permission at the end of a project with a restricted asset? Well, I think my view on that is it has to stay where it is as part of funds with restrictions, because if you can't use it for any purpose, it remains an asset that is subject to restrictions, as difficult as that might be.
And then I think they'll take this as the last one that Margaret's asked, what about assets which have been jointly funded? E.g. building a hospital. I've got a great example. I was at hospital with my son this morning in a hospital down the road in Kampala, and it's been funded by many different funders. I think in that case, and this is a real example, the use of the hospital becomes general purpose because the entire mission of the organisation is to run the hospital. So if once the money is given and the hospital's built, unless it's saying you can only use this hospital to fund people from such and such a region from the country or only for this operation, like if the restriction on the use of the asset is specific, not the overall objective of the organisation, then it's not a restricted asset. It's an unrestricted asset for use within the general purpose of the organisation. Let's see if we've got time for one more, because it's just come in. Please, can you clarify the issue regarding disclosure requirements for funds with and without restrictions as part of the notes, and not a presentation requirement in the income and expenditure statement?
Yeah, no, thank you. So in the first exposure draft that we published way back in November 2022, we proposed in there that the statement of income and expenses would have multiple columns on it. And for each year, you would show those transactions that are part of funds with restrictions, separate to those that are part of funds without restrictions, and a total. In this exposure draft, we are removing that as a requirement. If someone wants to do that, they can do it. We're not prohibiting that presentation, but we're no longer requiring it. And we're not requiring it anymore because we think that the new note that we're proposing as part of section 36 provides the information that stakeholders are looking for by showing the funds, the total income and the total expenses relating to those funds, and that will be in a note to the financial statement. So that with and without restrictions presentation relating to income and expenses must be in the notes to the accounts. It's no longer required to be on the face of the statement of income and expenses.
Brilliant. Thank you so much, Karen. I hope that clarifies for that. Clarifies that for you. So in the final few minutes, let me please encourage you to share your voice. I hope that the discussions and the questions that you've heard other people asking as well has, sparked things in your mind that make you think, I have an opinion about this. So how do you do it? You go to the website, ifr4mpo.org/have-your-say. There's a response template which you can download, and it has 37 questions that we've asked that we're really keen to get your feedback on. There's also a section at the bottom for anything else you want to tell us. Save that template, put your name on it, form your opinions by watching the videos, reading the documents, these webinars like this, and type your thoughts into the boxes that are there in the template. If you don't want to use the template, that's also fine. You can just write a letter, but it's really helpful for us to know which section of INPAG you're referring to, and to make it as clear and easy for us to analyse according to the different sections as possible. And then you simply upload it through the website. There's a simple form. It could not be easier. What happens to all your comments? They don't just go into a black box. They are analysed, as I say, profoundly. CITFA and the technical team, this is what they do and what they know how to do very, very well. Once the analysis has been done, the team will think of proposals, then they'll test those proposals or directions of travel, probably in focus groups, and then they'll be presented to the practitioner advisory group and the technical advisory group, both of whom are very international, diverse, groups that have been part of the project and the INPAG development process since the beginning. That process will end up in final INPAG being published in middle of 2025. So in short, your comments really matter. So the ways that you can stay engaged, please visit the website. You can subscribe to our monthly newsletter. We have a new page, which is how you can tell us that you're in support of the objectives of the project. It doesn't mean you support every single thing in INPAG. That's what the whole consultation process is about. But do you support the goals and the objectives and what we're trying to do? If you do, please do that, because it really helps us in advocacy with funders. It helps us in fundraising. It helps to show that there's a community of people out there that cares that this is done well and done right. And of course, join us on LinkedIn, other free events week after next, and the blogs. So with that, let me say a huge thank you to Karen and your team for all the work that's gone into developing this, and an even bigger thank you to all 83, 87 of you that have joined us today, and with really fantastic quality of questions. Really, really appreciate it. We will be, of course, sending a follow-up email with all the different links and resources that you'll need, and we look forward to seeing you soon. Please let me know if you've enjoyed this or any way we can improve this webinar experience, and have a great day. Bye-bye.